Hello, good morning. Happy Wednesday, everyone. I'm Justin Nimergood, your host of the Real Estate Rockstars. This week, we have another wonderful episode for you and an outstanding guest, which we'll be introducing here in a moment. None other than Mr. Brad Warren. Just a little bit about Brad before we bring him on the show here. Brad is a former national and international speaker and coach. He has traveled to 19 countries and 27 of the U.S. for over 40 years, teaching business courses. He's spoken in front of 60,000 people, coached 500 plus business owners, is the 2014 Bay East Association of Realtors Affiliate of the Year, author of Just Sold, The Real Estate Professional's Guide to Selling More in Less Time. And he's spoken at the National Association of Realtors 2016 and 2017 annual conventions. After 40 plus years as a business coach, Brad transitioned to a new career as a land banking specialist in 2018, helping patient investors build generational wealth by investing in land. It's without further ado that I'd like to welcome Mr. Brad Warren to the show. Welcome, Brad.
Oh, thank you very much, Justin.
It's a pleasure to have you on here, sir. So let's get right into it, if we could.
Sure.
If you wouldn't mind telling everyone, how did you get into real estate?
Well, as a coach, I got into real estate because a friend recommended that I apply to Keller Williams to become one of their coaches. And at the time, I had no real estate background. And I told her that. She said, no, they just want good coaches. So very long story, very short. I applied, I got accepted, worked for them for a little over 6 years. And most of my clients were real estate agents. And then in 2012, I bought my first piece of land, vacant land. Up to then, I had been investing in other kinds of real estate, but I bought my first piece of land. And then in 2018, I got my real estate license and actually started to work for the company that I was buying all this land from. And that's kind of how I got into it.
Nice. Wonderful story. So, the real estate industry has gone through, and I'm sure you've seen a bit of it, ebbs and flows throughout the years, right? One question I love to ask, especially those that follow the market closely right now, is what do you see as the biggest challenge facing the real estate industry today?
Wow. Lack of inventory.
There's a lot of them, right?
There's a lot. Yeah, it's like running through my mind. I think lack of inventory seems to be the thing that I read the most about. There's just not. I'm 74 years old. So all the boomers like myself, I've been in my house for 28 years and I ain't going nowhere. So we're not going to sell. A lot of boomers are staying where they are. They're not putting their homes up for sale. And because where are they going to go? Well, maybe a nursing home, something like that. But a lot of them are leaving their house to their children or grandchildren. So the lack of inventory right now, that seems to be the biggest issue that I've come across.
Yeah, and it's becoming problematic because I don't know how much you know about like the millennials, but the millennials are the first generation of their kind that their production of income has failed to outpace that of the generations prior, meaning that it's a disparity between the inflation rate of the US and obviously inflation rate of homes here in America and the inflation rate of cost of living and how much they're paid on the regular salary scale, if you will. So their purchasing power just is not there, right?
Correct.
So you combine that with the fact that we have low inventory and we're in quite a pickle here in the US, and many people might not really say that, and on the facade there's a lot we have going well still, I would say.
Yep.
But inventory is absolutely a huge problem. No mistake about it. So I'm curious, as someone that it's really seen the gamut of things in this industry, what do you say? And you could reference this as either your time as a coach, because obviously you spent a lot of time in your career as a coach, or your more recent time as a land banking specialist, or both. I'll leave that up to you. but what do you really consider the most rewarding part of your job?
It's helping what we call average investors get into owning land. We tell people invest in land because they're not making any more of it. And our other tagline is the best investment on earth is earth. And if you look at a lot of the millionaires, billionaires over time, a lot of their fortunes were made owning land. Bob Hope everybody thinks Bob Hope made all his money in entertainment. No, Bob Hope owned the land that became the Burbank Airport. So that's where he made most of his money in real estate. So it's rewarding to me to help what we call average investors. Our minimum investment is $25,000, which is fairly reasonable by most standards. And we help people build generational wealth. So they buy something fairly inexpensively, and then they hold. The key in our industry is to hold and wait till the developers need your land for a big project, and then you get multiple returns. That's how we build generational wealth for people. And it's very satisfying to help people out.
Now, this $25,000 investment, I'm sure, includes some sort of access to your expertise and your knowledge, coupled with investment in the actual product itself. Could you maybe break that down a little bit further, so people understand, if they were to partner with you following this show today, what that might look like?
I'll give you the short version because the long one takes a really long time. In order to invest with us, the first thing people have to do is get educated about land banking, because most people have no idea what that means. So we have a presentation. It's about an hour, and they have to watch it. Otherwise, they're not allowed to invest with us. Once we educate them and they understand what land banking is and how it operates, and then they determine and they want to do it, they then tell us what their price range is. They could say 50 to 75,000. They could say 150 to 200. They give us a range. Our research and acquisition department will go find a piece of property that fits their price range. And we only invest within a 60-mile radius of downtown LA. There's 10 reasons why. Again, can't go into that on this StreamYard interview or podcast. But we have a very high bar when it comes to finding the land. So we find them land, and then we sell them that one property. It's not like we pop them in a car, drive them around to 10 houses, show them all the different houses, and they get to choose. They just give us the price range. We find them the property, and then they have the option to buy that property or not. And then they hold. We're very conservative. We tell people 7 to 10 years is an average hold. And on average, our returns are 3 to 7x. 3 to 7 times your initial investment is what you want to look to get back in return.
Wow. And that's outstanding. I mean, if you look at that compared to typical real estate investments, certainly a typical investment, if you look at that as compared to the S&P 500 type of investments, it doesn't even compare. It's not even on the same planet.
Yeah. Well, that's what drew me to it in the first place. I realized in 2012, when I got my first property, that I couldn't retire. I was 22. I was 61 at the time. I had done a quarterly net worth statement that I've been doing since my wife and I got engaged in 1989. And I looked at it, and she could retire because she had a great 401k and had been investing over the course of many, many years. But I didn't have enough amassed that I could retire in the near future. And so I talked to my land banker. Her name is Marcella Silva. She came to our house, did a presentation at the kitchen table, just like a real estate agent trying to get a listing would do, only she was getting us to understand more about dirt. And that's why I said, when people say, Brad, what do you do? I say, I sell dirt. And they usually, they laugh or they giggle or they chuckle like that. And then I explain a little bit more about what that is. And so that's what got me going, was to try to build up my portfolio so that I could retire and not have to worry about where the money's coming from, and have a lot to leave to my daughter. I don't tell her how much. My wife and I don't tell her that she's getting a bunch of this, but she kind of knows. And she knows we owned her, but she doesn't know how many properties and how much they're worth.
Interesting. And a great way to absolutely, share the legacy wealth aspect of this, sharing that on and on. through the generations. Let me ask you this, Brad. What do you see first time, we'll call it investors, first time investors, what do you see as their largest mistake that they're often making?
Lack of due diligence. They can't just take the person's word for it. So I get leery when somebody gets on a call with me and they haven't seen the presentation and they go, "Oh yeah, I know what land banking is, buying dirt. Yeah, I'm ready to go. I got $50,000." And it's like, sorry, no, I will not work with somebody like that. They have to get educated first. So we do the due diligence. That's one of the things we explain to them in the presentation. We have a checklist. It's called the 16-point comprehensive analysis checklist. The research and acquisition department has that list, and every piece of property they look at has to get 16 yes check marks or we don't touch it. Our company only buys 1 out of every 30 properties that they look at. So that's like little over 3%. 1 out of every 30. The other 29 we reject for any number of reasons. And then we know that 1 out of 30 is a solid investment that we're willing to represent and put our name behind and offer to the investor.
Interesting. So, I mean, as someone that's really taken the land market by storm, I imagine land is your favorite investment strategy in real estate. Safe to say?
Sort of. I believe in don't put all your eggs in one basket. I believe in diversification. So yes, my wife and I own 12 properties. It's several $100,000 in land, but we also have a single family residence that's completely paid off. We had some crypto, but we got rid of it because it was just too crazy, driving me nuts every day, watching it do the up and down, up and down, up and down.
Yeah.
We have stocks. We have bonds with the U.S. government, very safe, solid investments. We have savings accounts that earn zero. So we're actually losing money. So we don't have very much in that. So we are very well diversified. And land was something that when I got the first piece of property, I did not have any at that time. I had done some investing in gas station and in some, syndications where everybody pools their money and then you buy an apartment building. And we did very well with that one. But getting into land was very different. And I love it. I love dirt. It's a lot of fun to talk about it. And it's fun to invest in it.
Nice. So I'm imagining, and again, correct me if I'm wrong, but when you package these deals for your clients, right? You're finding the property, you're basically presenting them the property for them to essentially move forward with if they decide to. I'm assuming you handle the negotiation as part of that as well.
Well, there's really no negotiations. There's a set price. It's not like buying a house. This is one of the things that we have to educate people about. We've had a few people try to bargain with us and I say, "Thank you. This is not for you." Click, and I hang up and I'm done with them because we've explained to them that this is the price. We've based it on a number of factors. We believe it's just below market value right now. So there's already some built-in equity. And Marcella actually puts together what's called a property profile. It's about a 30-minute video where she takes them through the location. She does a Google Earth shots to show you what's around it, because remember, it needs to be in the path of growth. Otherwise, it'll always stay as a piece of dirt. It'll never sell for more than what you bought for it, if you can even get that. So it has to be in the path of growth. As the land around it gets sold and there's less and less land, the value of your property starts to go up. Simple economics, supply and demand. So they watch the property profile and then they go, "Yep, I'll take it." And then they buy it. Where we do offer what's called free negotiation coaching is on the back end, on the exit strategy. So let's say, Justin, you buy a property, you buy, let's say like the one my wife got in December was 5 acres for $50,000.
Okay.
And let's say you've had it for 2 years and you get a call from an energy company, because this is in what's called non-residential / agricultural, and it's for a solar farm. That's where it's going to go. It's going to go for solar. And an energy company calls you and says, "Hi, Mr. Nimergood, we see that you bought this 5 acres for $50,000 2 years ago. We'd like to offer you $55,000. And you might think, 2 years, I made 10%. Okay, it's not so bad, but yeah, no. You say to them, I'll get back to you. Please send me an email with that in writing. I want to see the offer in writing. I'll get back to you. And you hang up the phone. You call me. Through Marcella, she gets a hold of the CEO of the company who gets involved in all negotiations. And he looks to see, are there any other of our investors in that immediate area who have gotten better offers? I don't want to use the word insider information because I'll get in trouble legally, but that's company information that we have that you as the investor don't know about. And so we'll give you, through the CEO to Marcella, to me, back to you, we'll give you questions to ask that energy company. Why do you want my land? What are you building? Oh, a solar farm. What's the name of the project? When are you breaking ground? How long will it take before it goes online? How many megawatts per acre will this produce? Because that gives you a sense of the value of the land. If you know how much electricity, if they are making 75,000 a year in the electricity generated from your acre, you're not going to take $55,000 for that property.
No.
In fact, you hopefully might want to get a 30-year lease where they're paying you $2,000, $3,000, $4,000 a month for 30 years with a 2% or 3%. It's now about 2.5%, may even be as high as 3% escalation clause. So you keep up with close to inflation. You might want to go for a land lease. So we give you all these questions. You go back to the energy company, and now they're scratching their head. They're going, "Oh, this Justin, he's no fool. He's not selling for 55." And you might even say, I'm aware of 2 other people in the immediate area of the boundaries of what you've just told me, and they've already been offered 85. I don't understand why you only offer me 55. And they go, Mr. Nimergood, we'll get back to you. Let me go talk to our accounting department. Maybe we made a mistake. And because now they got egg on their face, they're all embarrassed. They come back to you, and now they say, you paid 50, we'll offer you 100. Well, now you're at 2x. We'll go through another round. You to me, to Marcella, to the CEO, to Marcella, to me, to you. We'll give you more questions. Finally, they get to 175. You've crossed the three times would be 150. You're at 175. Now you're in the sweet spot. We told you 3 to 7x. 50,000, you're at 175. Not bad in 2 years, 3 years, even 4 years. Still a decent return. I can never tell you to sell, though, because that's considered financial advice. And I will lose my real estate license, and the company could get in a lot of trouble. So you say, Brad, they offered me 175. Sounds really good. I could use the money right now. Should I sell? And I would say something like this: Justin, that's a very good price. or Justin, that's fair market value according to the research that we're aware of. Have I told you to sell? Have I told you to sell? No. Have I told you not to sell? No. But those are the code words for, that sounds like a pretty good deal. Hey, we had one client, Marcella had a client. She bought 10 acres for $150,000. About a year and a half, she gets an offer for 300. She turns it down. 500. She turned it down. At this point, we said, we can't coach her anymore. She's not taking our advice. We told her that's a 500 was 3x. Long story, very, very short. She held out and got $1.5 million for her $150,000 investment. And it took that's what we call a 10 bagger or 10x. And it was about 3 years, I think, from start to finish between her buying it and her selling it, somewhere in that vicinity. Now, she may still be negotiating on the terms of when they're going to pay her, but that was the last I heard. That's where she finally said yes to 1.5. Now, that's an extreme example. I don't want people to be thinking everybody's going to get 10x, but that's kind of how it goes. And she did not take our advice. She went off on her own. That's okay. It's up to you. It's your land. It's your dirt. You do with it what you want, but we will try to guide you as best we can till you're in that sweet spot. And then it's up to you to nibble and try to get a little more if you want, or to just accept.
Wow. That is a fantastic story of what's possible by just staying the course, really.
Yep.
And I'm sure you guys were all scratching your heads like, oh man, she's not heeding the warnings. And it's one of those unique examples where it actually worked out, which good, you know what, good for her for having enough gumption to get through something
Absolutely.
like that.
Absolutely. And that's generational wealth. She does not have to work another, if she invests it wisely in income producing whatevers, someplace where she can get a nice return, she can live off that money, and her kids have a big inheritance coming up. And so that's why we call it generational or legacy wealth.
And in some ways, I liked your example there of the land lease back, because that, that's a cash flow. It's cash flowing, right? Which is different from taking your payout, if you will.
Right. And not only that, you still own the land at the end of the 30 years with the solar panels. Now they can come and take the solar panels away. Okay. Most likely they're not going to do that. So they use, a lot of times they go for a 5-year extension, maybe another 5-year extension after that. But you still own the land. It's still yours. You never gave it up. You just rented it, leased it, or rented it out. And they've done very well themselves. The energy company, I'm sure, makes well beyond what they're paying you in terms of amount of electricity produced
Yeah,
on
yeah.
that acreage.
I like that model for certain people, right?
Yes.
It's almost like it handcuffs you a little bit in a way that you're not taking the big payout like all at once. You're, staggering it over the next however many years. And I think for most people that aren't disciplined investors, that is often a better route, a better path for them.
Yeah. Like I said earlier, this is not for everybody. You have to be what we call a patient investor, and you have to have your eyes on the prize down the road and just sit and wait. And for some people, that's very difficult.
Absolutely. Now, let's talk a little bit about patience, and we're gonna move into our final section here, Brad, where we ask a couple zingers, a couple forward-thinking questions, if you
All
will.
right. Okay.
So, first one is this: let's say it's your 80th birthday. Who is there, and what's going on? Just set it up for us. What's going on your 80th birthday?
Well, that's only 5.5 years away, so not too far out in the future for me.
Okay.
But my wife, my daughter, hopefully my daughter has a husband by then and some grandkids.
Oh, pushing for the grandkids already. I see.
Yeah. Oh, we've been pushing for a while, Justin. Let me tell you, not pushing so much as praying and down on her knees, dear Lord, please find her a guy, a really nice guy, and get pregnant
Oh,
quickly and have a baby, because I'm ready for grandkids. So
oh.
I'm adopting all the neighborhood kids, the 4-year-olds that live around the corner and stuff. I'm starting to adopt them, Grandpa Brad,
A grandpa.
just to try it out. But yeah, close friends, family, people I've known for a really long time, and we're just having a great 80th birthday party, and hopefully still dancing, my wife loves to dance. We're rockers from the 60s, so we're going to have, Rolling Stones and really great bands just rocking it out and having a great party.
That's fantastic. And if you guys can't tell, Brad is a rock star. I mean, look at that rock star hair the guy's got, right? Yes. Love it. Love it. Yeah.
Okay.
Okay. So, second question is this. Let's imagine for a moment, and I hate to imagine this, but let's just, again, hypothetically, it's your last day on Earth, and you can only preserve 3 items to take with you in your time capsule. What are those items and why?
Wow. Only 3. Well, I would probably take, I don't know if this is, people can see this, right? They're watching this on StreamYard. So
Yep.
you see Grogu?
Yeah.
That's little Grogu.
Love
My wife had
Grogu.
a friend of hers crochet that for me, and I love the guy. He comes to all of my meetings. I even have a Christmas outfit for him. He has a second cape that's red and white, and it has a little buckle on it and everything, and a little cap. So
Oh,
I would take, yeah, that's the awe factor. I would take him along. I have very little jewelry, So I would most likely, yeah, I might take this. I might want to give it to my daughter. But my dad gave me this ring that he had. And I've got one little, this is a Italian horn of plenty. I forget what it is in Italian, but it's attached to a little thing that says expect miracles. And then
Oh,
the other two are the only other gold that I own besides my wedding ring and this ring here are things I got from T. Harv Ecker's classes. I took some of his, I took almost all of his training. And one of them said on the back says strength, and the other says illumination. And
oh,
they came from two classes from the, one of them was the warrior class and the other was wizard. And so that might have been 4 items. I don't know. Maybe I overstepped the bounds there.
no.
But that's probably what I would take because those have been with me for a very, very long time.
I have to compliment you on being unique because you'd be surprised asking similar questions to most of our guests. You do get a lot of similar responses. Hey, my wedding ring. I get that answer a lot, but Grogu. Now that was unique. That was definitely unique, Brad. So you are one of a kind in your Grogu response there. And I'm, by the way, a huge Star Wars nerd myself. So I'm a big
Okay.
fan.
Yes, as are we, my wife and I.
Nice. Nice. Okay. Final question for you here. What is your definition of a real estate rock star?
I would say it's somebody who has integrity and really has their client's best interests at heart. So if the client's looking at a house and the realtor realizes, there's something off about this one, something off about the other agent or whatever, and tells you straight out what they're really thinking and has that level of integrity, and knows that they're working for you, the buyer or the seller. They're not working for themselves. They're not working for their broker. I mean, technically, legally, they are, but
Mm-hmm.
they have the client's interests at heart above and beyond everything else, and they go the extra mile. Those are the rock star agents that I have come across in the course of my coaching. A lot of my coaching was with rock star agents, and they all had that quality. Their word was law. Their word was impeccable, and that's really important to me as well.
Yeah. Yeah, unfortunately, in an industry where there is so much money flying around, it's easy to get caught up in the monotony of that, and sometimes doing the wrong thing becomes almost like the standard in some ways. So I really applaud you for bringing the ethics back to the front and center of the industry because it's really what this is all about. It's about
Yep,
being ethical and we do have a fiduciary responsibility to our clients in this industry, no doubt.
absolutely, absolutely, and it's a legally binding fiduciary responsibility.
Absolutely. Absolutely. So, Brad, just before we wrap, tell our listeners and subscribers out there, where can they find and connect with you?
The best way is email. I'm not a texter. I don't give out my phone number, but it's just my name. I got this email a really long time ago, and it's my name, so I hopefully will never forget it. My email is brad@bradwarren.com. I respond even when I'm on vacation. I respond to all my emails usually within no more than 24 hours, and
Wonderful.
that's the way to get things started. I can introduce myself via email, learn a little bit about you. I can send people the link to register to watch the presentation, because it's always better if they watch the presentation before we even spend time going to a Zoom meeting. Like, why spend an hour in a Zoom meeting and then they go, "Oh, wait a minute, $25,000. I only have 10." Well, we just wasted an hour of my precious time as well as their precious time. So we let them see the presentation first. Then when they get on a call with me, they've got questions lined up. Well, it said something about I could buy with an IRA. Doesn't it have to be a self-directed IRA to invest in real estate? Yes. And let me tell you a little bit about that. I don't give financial advice, but I can tell them a little bit about the difference between a regular IRA and a self-directed IRA. And So brad@bradwarren.com. That's it. Get a hold of me that way and you'll hear back from me very quickly.
There you have it. brad@bradwarren.com, folks. Another wonderful episode here on the Real Estate Rockstars podcast. I'm your host, Justin Nimergood, signing off with Brad Warren. Everyone have a great rest of your week, and we'll see you again next week. Bye-bye, everyone.